Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news that strong gains in the relative value of the New Zealand currency as our trade gains with China multiply. China's exports in November shrank for a fourth consecutive month when valued in US dollars, but they actually rose when valued in yuan, a turnaround that they will be satisfied with. But growth in imports was stronger in both US dollars and yuan terms, and may be a sign that Beijing's stimulus steps are starting to work. And China's foreign currency reserves were essentially unchanged in November, holding at $3.1 trillion in a level they've been at for all of 2019. The Chinese trade data showed that New Zealand exported about twice as much to China in November than we imported from them. The politically sensitive trade with the US shows their exports to the US fell 8.4%, while their imports from the US fell almost 20%, leaving their large surplus with the US little changed. In the US, consumer credit rose 4.8% in October, and more than expected to be a record $4.16 trillion, or 19.3% of GDP. The US non-farm payroll survey data for November came in firmer than expected at 266,000 new jobs. There were also minor positive adjustments for both prior months. The end of the GM strike seems to have had a cascading impact. However, their low participation rate was unchanged at 63.2%. So while the rise will be welcomed, it isn't a sign that more people are being drawn back into their labour market. All this data supports the US Fed in its stance that their monetary policy settings are about right, and markets now don't expect any change when they meet next to review those settings on Thursday, New Zealand time. And the Bank of International Settlements has said that the combination of a reluctance of four big American banks to lend their cash reserves when some large hedge funds needed secured funding explains the gyrations in the New York repo market that caused the Federal Reserve to have to step in with emergency liquidity. In Canada, the situation is not as positive for payrolls. They recorded a drop in payrolls of 79,000 jobs in November and a rise in their jobless rate to 5.9%. And in Australia, there's more evidence of a steep contraction in the construction industry, and it's now at its lowest level since 2013. The contraction dived a worrying 3.9 points in November from October, and that's a big move. US Treasury 10-year yield is at 1.84% and a similar level to this time last week. Gold is down to $1,460 an ounce, that's down $4 for the week. And US oil prices are up further to just under $59.50 a barrel. That's a rise of $4, while the Brent benchmark is now on $64.50 a barrel. And the Kiwi dollar is on a tear, now up to 65.7 US cents, and 1.5 cents higher than this time last week, and it's higher since the end of July, 4 months ago. In the past month, it's up a remarkable 3.7%. On the cross rates were firmer too, up to 96 Australian cents, and that's another 1 cent gain in a week. In fact, since the start of November, we've gained more than 3 cents against the Aussie dollar. Against the euro, we're up to 59.4 euro cents, and that's also a gain of more than 1 cent in a week. That puts the trade-weighted index just on 70.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.